Subscribe to Alpha Finance and stay ahead with the latest financial insights. Now, let's delve into the changing landscape of the middle class. Historically, the middle class has been viewed as a financial safe haven, a marker of financial stability and a comfortable life. This has been defined by a steady income, home ownership, the ability to save, and a cushion for emergencies. In the United States, for instance, a family earning around $70,000 a year has been traditionally seen as comfortably middle class. However, over the past decade, this picture has been shifting. The inflation rate, which measures the increase in prices for goods and services, has been steadily climbing. In the past 10 years alone, cumulative inflation has been around 20%. This means that the dollar today doesn't go as far as it did a decade ago. In tandem with inflation, we're seeing the cost of living skyrocket. Everything from housing, healthcare, education to everyday groceries, it's all becoming more expensive. The cost of living has increased at a faster pace than the growth of median incomes, putting a squeeze on the middle class. The middle class is also facing an increasing burden of debt. Student loans, credit card debt, mortgages, these are all mounting, eating into the disposable income of the middle class. The cost of servicing this debt further erodes the purchasing power of the middle class, making it harder to maintain a comfortable lifestyle. In essence, the middle class is being squeezed from all sides. Incomes are not keeping up with the rising cost of living and the increasing burden of debt. The middle class of today is not the same as the middle class of a decade ago. The bar for what constitutes a middle-class income is being raised. So you see, the financial landscape is not what it used to be, and the definition of middle class is evolving. Let's delve into the real cost of living and how it's impacting what we define as middle class. Over the past decades, the cost of basic necessities such as housing, education and healthcare have skyrocketed. This has had a profound effect on the ability of individuals making $70,000 a year to maintain what we traditionally view as a middle-class lifestyle. Let's start with housing. The median price of a home in the United States has more than tripled since the 80s, taking a considerable bite out of the average paycheck. Even the cost of renting has significantly increased, making it a challenge for many to put a roof over their heads without financial strain. Next, we have education. The cost of college tuition has nearly doubled in the past 20 years, making it one of the most significant expenses for middle-class families. This doesn't even include the cost of textbooks, accommodation, and other associated costs, which only adds to the financial burden. Healthcare is another cost that can't be ignored. The average American spends more than $10,000 a year on healthcare, a figure that has risen by over 200% since the start of the millennium. This is especially concerning given that health emergencies can strike at any time, often leading to unexpected and substantial expenses. Then we have the cost of other basic necessities like food, transportation and utilities. These costs have also risen, albeit at a slower pace. But even a small increase can put pressure on a tight budget, leaving little room for savings or discretionary spending. In fact, when you add up all these costs, it becomes clear that for many, $70,000 a year is barely enough to cover the basics, let alone provide for a comfortable middle-class lifestyle. With these rising costs, can $70,000 a year truly provide a middle-class lifestyle? Now, let's debunk the myth of the 70K middle class. First things first, to understand this, let's consider what we typically attribute to a middle-class lifestyle. A comfortable home, a reliable car, health insurance, and enough funds to cover emergencies, education, and retirement. Sounds reasonable, right? Now let's take a look at the numbers. A modest home in the suburbs of a major city can run you around $35,000 a year in mortgage payments, taxes, and utilities. A used car with insurance and upkeep, that's about $5,000 a year. Health insurance for a family of 4, easily another $10,000. But we're not done yet. Add in groceries, clothing and other necessities and you're looking at another $10,000 or so. Then there's the cost of education. Whether it's for your children or your own continuing education, that's easily another $5,000 a year. And let's not forget about retirement savings. If you want to maintain your lifestyle after retirement, you'll need to sock away at least 10% of your income every year. That's $7,000 a year right there. So add it all up and what do you get? $72,000. And we haven't even factored in entertainment, vacations, or unexpected expenses like home repairs or medical emergencies. That's $70,000 a year salary. It's already stretched thin, and we're just covering the basics. And let's not forget about savings. The general rule of thumb is to save at least 20% of your income on a $70,000 salary. That's $14,000 a year. But with all these expenses, where is that money supposed to come from? It's clear to see $70,000 a year might have been enough to cover a middle-class lifestyle a couple of decades ago, but in today's economy, it's just not cutting it. So is $70K a year really middle class? Let's look at today's reality. The new middle class, what does it look like? In the evolving economic landscape, the definition of the middle class is changing. The middle class of yesteryears earning around $70,000 a year is now a thing of the past. So, what does the new middle class look like? In the 21st century, the middle class is scaling up. It's no longer about a specific income figure, but rather a range that adjusts with the cost of living, inflation, and the overall economy. Recent studies suggest that the new middle class falls within an income range of $100,000 to $150,000 per year. This shift is not arbitrary. It reflects the rising cost of living and other financial pressures that have become a part of our everyday lives. The cost of healthcare, education, housing, and even the price of a cup of coffee have all seen significant hikes. The Pew Research Center, a non-partisan think tank, defines the middle class as those earning between 2/3 and double the median household income. This means, in a country like the United States, the middle-class income range is substantially higher than the global average. Another interesting factor to consider is the growth of the upper middle class. This group, making between $150,000 to $300,000 per year, has seen significant growth over the past few decades. Their rise is a testament to the changing economic dynamics and the upward mobility that's increasingly possible in today's world. But let's not forget the role of financial literacy in shaping the new middle class. Understanding personal finance, investments, and wealth management are becoming essential skills for those seeking to secure their place in this new economic order. In conclusion, the middle class is not a static concept. It's an ever-evolving entity that shifts and morphs with the times. The new middle class is more affluent, more educated, and more financially savvy than its predecessors. The middle class is not disappearing, it's just moving up the income ladder. How does this change affect your future financial planning? That's the million-dollar question, isn't it? As we've learned, the financial landscape is shifting and the old rules no longer apply. So let's dive into some practical tips and advice to help you plan for this new financial reality. First and foremost, saving is more critical than ever. But it's not just about stashing away every spare penny, it's about strategic saving. Make your money work for you. Consider having a rainy day fund for emergencies, but also think about saving for the future, for retirement, for your children's education. Next, investing. It may seem daunting, especially with the unpredictability of the markets, but remember, investing is not about getting rich quick. It's about growing your wealth steadily over time. Look into diversified portfolios, low-risk bonds, high-growth stocks, and if you're not sure where to start, seek advice from financial experts. They can guide you to make informed decisions based on your financial goals and risk tolerance. Then there's budgeting. This is where you take control. Knowing where your money goes is empowering. You can identify areas where you can cut back, areas where you can invest more. Consider using apps or tools that help you track your income and expenses. And remember, budgeting is not about restricting your spending, it's about making conscious financial decisions. Lastly, educate yourself. Stay informed about the economy, about changes in the financial world. Read, listen to podcasts, attend webinars. Knowledge truly is power when it comes to financial planning. In this new financial reality, it's easy to feel overwhelmed. But remember, you have the power to shape your financial future. It's about being proactive, being informed, and making smart financial decisions. Remember, knowledge is power. Stay informed, plan wisely, and you'll be able to navigate through these changing times. With careful planning and a firm grasp on your financial situation, you can not only survive these changing times, but thrive. So take the reins of your financial future today.